Hi, Oren Baranowski, Chief Financial Officer of Treasury Metals. We're a well-funded Canadian-based gold-focused exploration development stage company. Our main asset is the Goliath Gold Complex, which is located in northwestern Ontario, near the town of Dryden, just off the Trans-Canada Highway. And we host close to a 3 million ounce resource measured, indicated, and inferred. Have a federal EA for the project. We completed our PA in 2021 and are working towards the completion of our pre-feasibility study this year.
Good morning. My name is Doug Silver. I'm chairman of Chicana Copper. We're a publicly listed company that has this giant field of breccia pipes in Peru that are very high-grade copper, and we're currently drilling them out.
Hi, my name is Blaine Monahan. I'm the president and CEO of Pacific Ridge Exploration Limited. We are listed on the Toronto Venture under the symbol PEX, Papa Echo X-ray, and on the OTCQB. Our goal is to become BC's leading copper gold exploration company, and we have 2 active drill programs underway right now.
Thank you very much, gentlemen. You're joining us today to answer the question, how do retail investors value companies? It's pretty tough out there. So I guess we should do what all good students do, and that's examine the universe that we're examining. So Doug, maybe you can help us understand, like, how many companies are actually out there for investors to look at?
I did a study earlier this year, and 80% of the public mineral company market cap is contained in 5 countries. So Canada has the most with about 1,400. Australia has about 660 companies. South Africa has just a handful, a couple dozen. And the United Kingdom has a little over 100. The US has about 170. So you have about 2,400 public companies that represent 80% of the market cap of the industry.
So, right. So that's the universe. So as assets evolve and go further down that value curve, the more valuable they should become, but it isn't always the case. And I guess we're going to try and understand that today. So Blaine, you're hunting copper and gold actually up in BC. I mean, BC hasn't been a fun place for explorers recently, has it?
The environment's certainly improved. We're focused on porphyry projects in BC, and I would certainly say over the last decade, there hasn't been that much interest in porphyries, but in the last year, the interest level has picked up considerably. We're seeing seniors make acquisitions, we're seeing joint ventures, we're seeing strategic investments, and largely that's driven by the fact of the increase in the price of copper and forecasted demand, and also increased political risk in South America. You're seeing a lot of companies, that's their stomping ground, and are now looking further afield for new discoveries to help hedge that risk and bring new projects into the pipeline to meet that forecasted demand. So a lot more interest in BC, and we've certainly seen that in our company as well.
Okay, you've hit one of the talking points that we're going to cover in this conversation later, which is jurisdictional risk and assessment. And Oren, just bringing into the conversation, you've actually stepped into, advance a company which had hit a roadblock or 2 along the way. So new team with a build experience, which thinks they can fix a broken a company with a few issues and get it into production. So you're probably going to help us today understand that the bumps along the road. So what are your thoughts with regards to how a company like yours can kind of reboot itself?
Yeah, I think, Treasury is the combination of a project Goliath and then Goldman that was done in late 2020, and both of those projects have been around for a while, but never had the critical mass to move forward. And so we put those 2 projects together, and now we feel that we've got the critical mass to move it forward. We put a new team in place that will be able to drive the project through studies all the way through to construction, with a team of people that have been there and done that before.
Right. Okay. And Doug, just bring this back full circle around to you. So you've helped us understand one aspect of the dynamics of the market, which is how many players there are. But there's also different types of investors out there. We've got short-term investors, day traders, etc. We've got investors with a slightly longer time horizon risk profile. Who do you prefer attract for your businesses?
Yeah, I mean, given how volatile prices are these days, and I'll include in that volatility, political volatility in various formerly pro-mining countries. The short-term investor has a lot of opportunities. whether it's chasing commodities or chasing countries. The long-term investor, though, is really in a wonderful spot right now, because let's just take copper. Before the pandemic in 2019, all the forecast was that there's a huge copper shortfall. We then have the pandemic, which shut down countries like Peru, and a lot of other places got delayed or slowed down, which exacerbates the shortfall story. And then we have the whole electrification in the EV world coming on like gangbusters, which is also copper focused. And meanwhile, copper prices are down 30%. So if you're a long-term investor, now's the time to load up, because the fundamental supply demand is so out of whack that eventually it's going to have to pivot.
Right. So Blaine, we got to talk thematics here. Okay. So we're talking copper and gold today. You sit in both camps, copper and gold. Gold's obviously the big 800-pound gorilla in the room. People understand that. Copper thematic has been on the rise for the last 24 months. You've hedged your bets well, and your share price has reflected that. That's nice. But how does a small company start off placing itself into the market in terms of trying to raise money? Do you guys sort of say, well, let's pick up a project, any project will do, and we'll see if we can make it work? Or did you consciously think, well, actually, I need a bit of gold, I need a bit of copper, so let's go hunt for projects like that?
That's a really good question. And it's a very important part of the equation when evaluating a company is the management and the plan and the strategy. What are they seeking to do? There are a lot of different reasons why companies choose different courses of action. And for ourselves, we historically have been focused on gold projects in the Yukon. We realized it was very difficult to fund these early stage projects in the Yukon, 2018, 2019. So we started thinking perhaps it was time for a pivot. We started thinking about different commodities, different jurisdictions. We landed on copper. We were very bullish on copper at the time. I mean, at that time, copper was just trading slightly north of $2. And we felt there were a lot of opportunities in BC because there had not been a lot of exploration in BC in the past decade for porphyry. So we sort of limited our search to that. We were very fortunate to option Clayul, our flagship, from Centerra in January 2020. And at that time, again, copper was just slightly north of $2. So I think you have to have a plan, you have to execute, and it has to be based on some good logic. And our logic, again, was jurisdictional and also a commodity price that we were very bullish on, seeing that we felt that the price was low. And with the electrification of society and increased political risk, we felt there was going to be a lot more demand for copper, and that's played out. Yeah,
right. Okay, so management, who've been there, done it before, having a plan and being able to execute on it for sure. I mean, Aaron, your guys have that in abundance, but you went and decided we're going to try and fix something which another management team couldn't. That's pretty brave of you. So why, if I'm an investor looking in, would I think that was a sensible thing to do?
I think it was an overlooked opportunity. When we look at Clayul, it was orphaned because it belonged in another project's portfolio that was acquired. A bigger company acquired it. And now all of a sudden, they just have this asset. It's not a focus. They're looking to monetize. We're looking for an asset to advance. So as far as they're concerned, it's a win-win. It's not a focus of theirs. They're a producer. We want to spend our money and advance it, and they would retain an interest. So it makes a lot of sense for both parties in that instance. And again, it was a wonderful opportunity. The timing was great, and we have created value, not only for ourselves and our shareholders, but also for Centerra.
Aaron, I could ask the same question of you.
I think, when we looked at Treasury, at the Goliath project, I look at it and say, this is a project that's not too big to build. It's a reasonable size. It's a 5,000 ton a day mill that we're looking at. Lots of those around the world. And the location, I mean, my previous experience, Jeremy's previous experience is building mines in a much more remote location. I mean, I had the benefit of having a permanent road, whereas Jeremy had a winter road access. And when you start looking at when you want to advance a project through all the way to, through construction all the way into production, logistics is a huge factor for some of these northern projects where, you're 9 hours off the Trans-Canada Highway for us, the rail hub for all the projects that are being built in Northern Ontario, all that, goes right along our property boundary. We've got power lines that run across our property. So those were kind of the factors that drew me to the project, that said, I can, with my experience, I think we can finance this, we can build it, we can bring it in production and use that as a base for growth down the road.
Right, but do you need this? Do you need to get this into production to kind of create value? It seems that lots of companies have got huge valuations, and I would argue that they're probably going to struggle to get into economic production.
You don't. I mean, there's different paths that you can go on. There is the group that wants to just explore and build and try to pretty it up for sale. But if you're interested in being the ultimate operator of the project, you want to know what it is that you're going to be operating. So you have a different mindset in how you go about advancing the project forward. And I'm not saying one is right or one is wrong, but I think the path that we are going on is the path that we think will create value for Treasury Metal shareholders, in that there's a project that has been around for 10 plus years and hasn't really gone anywhere. And I think we need to show, and what we've done over the past 18 months to 24 months is we've set expectations, we've met those expectations, we've grown the project, and we're moving the ball forward.
Right, Doug, your project, copper. So I agree with you. The thematic is a good one. I think Blaine would agree with you. Thematic is a good one. You're at that point where the company is, well, you could argue, cash constrained and in an economic environment which doesn't help. So what are the tricks of the trade for you to kind of survive and come out the other side? What should, again, retail investors be looking at in terms of your ability to do that, and for them to kind of stick with you, given the size of the prize on the ground that you guys have been talking about?
Well, first of all, we did raise plenty of money this year, so we're good for another year and a half. So on the financial side. And what we found is that everybody who can't raise money is now calling us, because if you have money, cash is king right now. If you don't have money, it's time to look for a partner or a merger or an RTO or what have you. I want to comment on the other two speakers, because what they're doing is really important. I mean, Blaine, you're chasing porphyries. You win in multiple ways. If you find one, it's going to be huge. And the big companies like huge. In addition, I mean, even this week, Mark Bristow from Barrick gave a whole interview about copper. So you don't only have copper companies wanting to buy copper projects, you have gold companies wanting to buy copper. So you get two bites at the apple, and both of them by huge companies. And Oren, you're in the same position because you have multiple millions of ounces, and these big gold companies need multiple millions of ounces. So you keep putting lipstick on it, and you can either build it, you can flip it, you can merge with a peer and create something that goes up a tier level. All of those are tremendous ways to create value. In Chicana's case, we're all about grade. We have phenomenal copper grades. We don't have hundreds of millions of tons, but we have 120 targets that have been highly defined. We've got grade of pushing 2%. And if cash isn't king, then grade is king. So we win on that size. You guys win on tonnage and contained metal side.
So what happens to all these companies, Doug, that may be cash constrained? I agree with you. Cash is always king, gives you optionality. But is it a case of, the tide goes out and people see what you're wearing, or there are roll-up opportunities? And if there are, again, how do you pick the good stuff? Because surely if it was good, it should have worked first time around.
Yeah, I mean, first of all, this is very healthy. It's like when the stock market corrects downward. We need a bit of winnowing. There's only so much money coming in the market, and I'm sorry, but there's a lot of companies that don't deserve financing. Their projects are in incredibly tough places to operate, or their grades are incredibly low, or there's a myriad of reasons why they should have walked away a year ago. So the winners will be the better projects. Projects will be lost, or people will get amazing deals for consolidating. And I think that's what you're going to see. I think, I mean, my research shows that the number of companies has been increasing for the last 3 years, but with the recession already here and the difficulty in raising money, we're gonna see a lot of the early stage companies disappear in one format or another.
Do you feel that 2020 was like it did a disservice to the sector because there was so much money being dished out to anything seemed to be able to raise capital? Do you think, again, Doug, I'll just stick with you for this for a second, is it a case of, you can't have those highs without some lows to kind of level out, to winnow the market, as it were?
Yeah, I mean, it's part of the cycle. And the weird part about the cycle right now is we're not in a normal business cycle, because you have to superimpose the continual interruption of business by COVID. We're now on B4 and B5, and that's going to continue creating havoc. And then on top of that, you have the economic recession by normal industrial means. So yeah, we were in gifted times back in 2020. Right now, the next 6 to 12 months is going to be rough for a lot of people. But that's just part of life.
And I think those peaks really hurt, the sector, because the generalist investor comes in at the tail end of that, and then the price is correct, and projects that maybe shouldn't have got money, and then that investor's left holding the bag, and then they become gun shy to invest in good projects going forward.
I would also add, when we're thinking about the current environment, that I certainly don't think it was overheated up until April, and I'm kind of using April 1 as my cutoff for kind of the correction. And the metric I always look at is the TSX Venture, just the index as a whole. And I mean, today in the 600 odd range, I mean, that's basically where it was during the great financial crisis. We got as low as into the 300 range, sometime last year, but it's been as high as 3,000 during what I would consider the real bubble of kind of 2006 to 2008. So although we were seeing more inflows, I still think it's historically not even close to where we would have been in an overheated environment. I think there are companies that are certainly going to suffer in the short term, but that will create opportunities for other companies. But I still don't think that we're even close to where we have been in the past.
One thing that's really important is that usually recessions follow a period of irrational exuberance. This time, the recession has caused, it's an inventory recession. And, great numbers came out this morning in the US on how inflation is dropping, but the stalling of the US economy and the global economy is going to allow supplies to catch up with demand. So it's quite different from how markets normally crash. And I think this is really positive, because as we get the supply chain delay situation figured out, then the economy is going to take off again, and then metals are going to become very popular. And Oren, you're absolutely right about the unfortunate happenings at a peak market. But at the end of the day, once people see that demand is up and there's now supply, I think we're going to see a run on prices again.
It's almost like we're going to have to get a bit cliched here, guys, and talk about the fundamental components as to how you invest, how you value a company. Bring it back to the heading of this show, because Doug, you've mentioned, we talked about short-term and long-term investors and the different types of profiles there. And of course, here we've got exploration companies and also a development company, which again has its own nuances here. But what I felt the last 2-3 years in this space, it's been a lot about sentiment and emotion and feelings, which is part of the market dynamic, and very little on the basics, which I would hope we're going to talk about now, which is around sort of management teams, their decision making, which was touched upon here, but I think there's more to it. The assets themselves, how do you value those? And in the case of a development project which have got studies on them, Oren, where you're talking about EV ounces and return on capital invested and P to NAV, etc. I mean, so Oren, maybe start with you, because you're on the finance side of things. When you were coming in, like say when you came into Treasury, you said, right, I got to assess what we've got here. You're probably not the guy that was assessing the asset. What were you looking at?
Well, I mean, when I look at Treasury metals, I look at things like location, permitting, team, those are the factors that come into, and then where it is on the valuation spectrum relative to peers. So location, We're, on the Trans-Canada Highway, we're on the rail line, we're on power lines, so if you put two projects next to each other and one is a 2 gram project and one is a 1 gram project, and all you're looking at it on a piece of paper, you say, well, the 2 gram project's better. Well, what if that 2 gram project is in the middle of nowhere and it's really hard to get to? So all of a sudden that logistical element says, yeah, well, you're going to have a much higher cost environment. So now that 1 gram project becomes a lot more attractive. And I think that's where, we certainly tick the box in terms of location, and then location also in terms of looking at where it is relative to other. Is it a mining camp? Is it not a mining camp? So, if you have impacted Indigenous communities, have they done IBA's negotiations, or is this a brand new process for them? That becomes a more difficult element if you're going into a brand new area. Permits, we've got a federal EA. Permitting, the permitting process in Canada and around the world is taking longer. So those timelines to get those permits, how far are you away from getting your ultimate, mining construction permit? That should factor into the evaluation exercise. And then finally, you do need to look at the team. What is the background of the principles that are involved with taking this project from where it is today and taking it forward? You want a team of people that have done this before. If you're looking at a project that either if it's a project for sale, have these people, built value and sold projects for higher prices than where they came in, or are these people that have built projects that have come in ahead of schedule, under budget, and then the project, operates successfully for years? Those are the kinds of things that you need to be looking at when assessing how to value, and within the valuation spectrum, you would ascribe a much higher value to teams of people that have been there and done that before, have the location, have the grade, have all those key factors for success.
So, Doug, in these conversations I have every day of the week, I speak to the CEOs, industry people. They know what good looks like, and they know what bad looks like, and they know which projects will work, which projects won't. If you're choosing which company you want to come and work for, are you making your judgments based on emotions, like how much are they going to pay me, or it'll do for now until I find the next best thing? Because it's your brand, your reputation that's on the line here. So you walked into Chicana Copper, why?
Yeah, it's all about severance packages. No, just kidding.
I'll do the jokes.
Yeah, okay. So just to finish up on what Oren and Blaine have been saying, if you're looking at open pits, first thing you look at is grade. Second thing you look at is waste ore ratio. Because I go through 100 economic studies a year, and when somebody has a high waste ore ratio and a low grade, they're not going to be a low cost producer. Sorry, the engineering company screwed up. You go underground, the first thing you look at is grade, and it darn well better be multiples of what an open pit would be. And you have to look at that grade over mineable widths. So, somebody who has very, very low grade over 100 meters, who cares? It's not viable. But if they have high grade over a mineable width, then it's got a shot. I joined Chicana for a couple of reasons. One is having stepped out of private equity after 10 years, I wanted to go back to my geologic roots and work on some really interesting geology. And I've been in breccia pipes about 3 or 4 times now in my career, or kimberlites, and I love them. They're great geology. The grades on this thing are killer. Grade is king, particularly when metal prices come down. We've got phenomenal grade. I think we can find a lot more. That was a big incentive for me. It had nothing to do with pay for me because I'm quasi-retired. It was about the opportunity to create massive value, because I did that with International Royalty. I'd like to do it again. And so if somebody at my age has different things than if I was 40-year-old looking for a job. If I was a 40-year-old looking for a job, I would actually spend the time, because everything's available on the internet, and figure out how this company ranks relative to its peers on things like grade and project status and, all those things. A lot of people take jobs because they have to, but you don't want to join a company that fails, because then that's going to follow you around the rest of your career. So you really do need to do some work. And the good management teams are fairly well known by the investing public. And in my case, because of my age, I can make 3 phone calls and find out anything I need about anybody off the record or on the record.
Well, it's a shame you guys couldn't share more of the off the record stuff, because it's fascinating when I talk to you CEOs after or before filming. I'll learn more then than during the show because you've got to be a bit muted. I guess the public market has its ups and it has its downs as well. Blaine, I mean, what about you? I mean, what do you think's relevant and important as as investors looking into companies, especially with companies like you? Because there are lots of companies like you guys of a certain size, and as we heard from Doug right at the outset, the chances of success are not great. So what's the difference between companies that will succeed and those that won't?
Sorry, I just got a text from somebody saying that Doug Silver was asking about me. So he wants to find out who Blaine Moynihan is.
Literally, he's three phone calls away from any of us.
Full disclosure, I did my thesis on political risk in mineral exploration and mining, and I've always found that very intriguing. Honestly, mineral exploration and mining is difficult enough without political risk. So first and foremost, I just try to avoid it by being in jurisdictions that I think are favorable for mineral exploration and mining. And that shifts and that changes. But I think that the three most important things would be management, projects, and then share structure. Management, I mean, do they have experience? Whether if they've been involved in discoveries or M&A, can they access capital, which is critically important right now. It's easy when times are good, but right now is when you prove yourself. Can you attract talent? That's one of the biggest risks in this industry. Also, it's talent, whether on the technical side or directors and management. So, can you attract talent? And to, I'm not going to say to a lesser extent, but promotional ability. Can you actually go out there and speak to people, convey your message in a way that's going to get people to buy in? And that filters up to all these other things I just spoke about, whether your ability to attract talent, capital, et cetera, selling your company, selling your project, you're selling. Then of course, projects, what stage are you at? The commodity, and again, jurisdiction, I think is really, really important.
Well, hang on. Come on. You can't say I studied political risk in minerals without us taking advantage of this situation. Because the question I'm asking a lot recently is, what does tier one jurisdiction mean anymore? It used to be obvious. Anything in a Western jurisdiction, fine. Anything not, you got to be careful. And there would be a premium for one and a discount for another. Rules seems to have been thrown out the window. Is that your view, Blaine?
I would disagree. I would say, you can't just look at Canada as a whole or the US as a whole. You have to look at Canada by province and states. You have to look it up by the state level. And, I'm not dealing with projects that have MPVs, but, there's some people that might argue that a project in Nevada should have a zero discount, because it's so supremely safe. And there's some other companies that might be trying to put out a discount of 5%, some jurisdictions, and people are saying, no, at a minimum, that should be an 8 or a 10, and that's how I'm going to value it. So you do have to be selective. Things do change. They are fluid. And that's why you also have to make sure that you're monitoring the situation and also just not relying upon the people on the ground in that country or jurisdiction that you're operating in, because they might just have their own inherent biases that they can't avoid.
Right. But we've had companies come on here who have left Nevada because it has got harder. It's got more expensive, not just drill costs, running costs, but the paperwork. Said, no, we're going back to Canada. So
I'd say that Nevada's just gotten harder because it's been so successful. It's not easy to make discoveries in Nevada because it's been well explored for well over 100 years. Jurisdiction, infrastructure in Nevada is fantastic. It's a cheap jurisdiction for exploration because of the infrastructure, but your land holding costs is what will get you. Payments to the BLM or forestry, if you've got a very big land package, you're paying in US dollars. And you need to have success or you're going to keep reducing your properties or have to drop them. And you also don't get the advantage if you're in Canada of flow through dollars. That's less dilutive financing that's very advantageous to Canadian companies.
Even Nevada's having issues. Look at Thacker Pass. There's a lot of opposition to that. And I think what we're seeing, an interesting time for this call because, look at Chile. In the last 10 years, I think Chile's had one mining application they didn't approve for construction. This year alone, there's 6. So in Nevada, we're finally seeing NGOs pushing up against the lithium projects. And I think that we're going through a transition right now where the political risk in North America, the political risk is the indigenous people. Do you get your IBA? Where in Latin America, it's more, environmental ministers and people like that. But you need to be on top of it and not assume that, everything in the US is like Nevada or everything in South America is like the old Chile. It's gotten very project specific or provincially specific, and you've got to do serious homework because they can stop you dead in your tracks no matter how much economic development you're doing for the country or the state.
I think bottom line is just political risk is increasing in every jurisdiction. Permitting gets more and more difficult. The timelines keep pushing out and it keeps getting more and more expensive, which ultimately I guess should be good for all of us as far as increased metal prices, because we're not going to be able to meet demand if we keep going down this road.
Feeds the whole argument about why metal prices are getting ready to pivot.
And what jurisdiction is in vogue? These things are cyclical. 10 years ago, no one wanted to invest in Nevada, and now it's a hotspot. 10 years ago, no one wanted to invest in BC, and now there's all kinds of activity going on there. There's 3 or 4 different projects being built right now in northwestern Ontario. So people talk about it being a difficult permitting environment. Well, I would argue that it's, there are mines that are in construction that are being built right now. So I would say it's a great time to be in Ontario because there are projects that are advancing and moving forward.
Yeah, I'd agree with you. We've had companies on here suffering because perception of doing business in California. And, we've got the CEOs will come on and go, well, it depends which county in California you're in. So that's really very precise.
They're getting very granular.
Right. So it's US, state, county. That's very, very granular. And we're going through the same process. We're buying a copper mine at the moment. And, we had to do a lot more work on the jurisdiction than we would have in the past, because obviously what's going on there with the new government and their attitude to new mining projects. So it's what I'm saying is it's a difficult environment for you guys to work out. Well, the thematic is easy. That's the easy bit. Jurisdiction, it's getting a little bit more complicated, but you still know where you're at. And then I appreciate the management team, their plans, and the evaluating the asset is easy. But there's a kind of also market dynamic in moments like this. Again, you be forgiven for doubting yourselves somewhat. But it's a cycle. We'll come out the other side, won't we, guys? Well, you have to take
Absolutely. A long-term view. You have to take a long-term view on this, right? You can't just look at, okay, well, in the short term, it's difficult. So we got to down tools. You've got to take a long-term view. Is this a project that should go ahead? Is it going to generate strong cash flows for a long period of time? Yes. Then you drive forward with it. And you take on the short-term impacts that come along. We're fortunate to be in a well-financed situation because we raised money earlier this year. I'm thankful that we did. I wouldn't want to be raising money today, but that doesn't mean the project is any less valuable today than it was 6 months ago, because these things can come and go, and you need to be in a position. You need to keep the momentum going to keep the project moving forward, because it's really hard when you stop to restart. So you have to keep driving forward.
I'd like to add to what Oren said, and it's a really important consideration sort of at my end on the exploration side, and it was a point I was talking about earlier as far as structure, and this is related to financing and the ability to move forward. Obviously, the better the share structure of a company, the more leverage or torque an investor can have if it has success. But does that mean that a company should avoid a financing in down markets and not advance their projects? I would disagree with that. And this is to Oren's point that you always need to be moving forward. And some of the best CEOs, I think, would take a similar view that you take the money that's required to advance your project. And sometimes that works for you, sometimes it works against you. But if you're not moving forward, you're dead in the water, and you're gonna pay for it. You're not creating value.
Yeah. If you hold out for that last 5 cents, that money might not be there. and you'll take a lot of flack for you. You're always going to take flack for raising money. You never raise the money at the right price. It's never high enough. But you're going to take a lot more heat if you don't raise money and then you can't, right? So it's always, sometimes you do have to make that tough decision to say, well, this might be a down round, but longer term, we think the value is there for the shareholders. So that's why we made that decision.
Oren brought up another good point, which I think is probably lost on a lot of investors. We all know that management of the companies is a key factor as to whether you want to support them. Everybody always wants to, back a winning horse. But nowadays, with the strong delays in permitting for all sorts of different reasons, I think, Oren, you're absolutely right. People need to do more due diligence on the quality of the permitting people or the indigenous people you're signing an IBA with. People need to do more research on them and not assume that you could just sit down and cut a deal, because it just doesn't work that way anymore. So management on both sides of that equation, I think, carry almost an equal weight. Because if you have a permitting agency that's never permitted this mine before, doesn't matter how good you are as a manager, you're going to be swimming upstream the whole way. And so I think this is a big area, and particularly in Chile right now with this new environmental minister, apparently doesn't understand his economy, but knows how to be a strong environmentalist. Your
commodity matters as well too, because there are certain groups that will be in favor of certain types of mines, but not in favor of certain types of other types of mines. So you can't just take that blanket statement that no projects go ahead or all projects go ahead. It's more nuanced than that.
I'd like to say something to Doug's point as far as the quality of the team moving forward with negotiations, whether it's say with First Nations or government officials. I spend a huge amount of my time liaising and communicating with the various nations that our projects are located in BC. I knew that I would be spending quite a bit of time on it, but I say I'm probably devoting anywhere from 25 to 50% of my time in making sure that all the nations are informed, they know what we're doing, that if we're looking to amend permits, that they're getting drafts beforehand to provide comments, to mitigate any concerns they might have, to make sure that they have the first chance of bidding for contracts and employing members. It's critically important. It's a critically important part of my job, and I think it's a very important part of any CEO's job if you're operating in Canada and dealing with First Nations. And if a company is not doing an adequate job of that, I'd say that's a huge flag, and you should run, because if the project runs into opposition from any local First Nation, that project is going nowhere.
Yeah, I think that's a good point, and a good point to end on. Guys, I'm going to give you each 2 minutes to give and share with us reasons why investors should be looking at your particular companies and investing in them. So, Oren, I'll kick off with you.
Okay. Why Treasury Metals? I think all the factors that we've talked about here today, I think we tick off all those boxes. We're in Ontario, we're northwestern Ontario, we're on the Trans-Canada Highway, we're on power lines, we're on rail lines. So that risk mitigation factor for driving that project forward into construction, that logistical element, we were able to meet that. In terms of permitting, we're dealing with Indigenous communities that have negotiated IBAs in the past. We have a head of our head of community engagement has probably done, 10 to 20 IBAs in the province of Ontario over the last 10 years. So she's well versed in dealing with communities to get these agreements signed. We have a federal EA, so we're now working on the provincial permits and that's a big factor for Canada. And I think we have the team in place of people that have built mines successfully, that have permitted mines, that have negotiated IBAs, and have financed constructions of projects. So I think we have all the elements of success for what you want in a development project.
Doug?
Yeah, so we talk about the green economy and electrification, and copper keeps showing up as one of the green metals, probably because when it oxidizes, it turns green. But no disrespect to Blaine, but most of the porphyry copper deposits that are being discovered and delineated these days are exceptionally low grade, which makes them not green at all because they have larger cycle times, more emissions, more rock to move. So at Chicana, we're chasing high grade. We're pushing 2% copper. We've got a great gold kicker. We put out our maiden resource in January. We're drilling another 20 or 30 pipes this year. And our idea is to build a tier one project with high grade, because we think high grade should get a special premium in the market.
Blaine?
Well, as I mentioned at the outset, our goal is to become BC's leading copper gold exploration company. We've made great strides since we made our first acquisition in 2020 with Clayul, our flagship, which we're drilling right now. We now have 5 copper gold projects in BC, porphyries. And we recently entered into an option agreement with Antofagasta that's funding a 1,500 meter drill program right now at RDP. So it's a busy summer for us. We have 2 drill programs totaling 7,500 meters. We're hopeful that we're going to make a significant new copper gold porphyry discovery in BC, which, as we talked about before, I think would be attractive to both copper and gold mining companies. So we're very excited. We think we got an early start on porphyry exploration in BC. We've been rewarded, our shareholders have been rewarded. And if we can keep delivering success, there's more rewards to come.
Gentlemen, thank you very much for all of that insight. And if you're listening to this or watching this, think about the way that these guys think about their business and how they grow their businesses, and think about you're investing in the same way. You won't go far wrong. So Oren Baranowski, CFO at Treasury Metals, Doug Silver, Chairman at Chicana Copper, and Blaine Monahan, President and CEO of Pacific Ridge Exploration. Gentlemen, I thank you.
Thank you very much, Matt.